Welcome back to another episode of the Anatomy of the Trade. Today we're going to discuss a couple of trades in Virgin Galactic that I've conducted in the last year or so. And here it is. And right away I want to say that these are quite ugly trades. Why are they ugly? Well, because they kind of have the same logic behind them, and the mistake that is being made is also the same. And that's why I would call them ugly, is because the mistake is not being corrected. So let's go through this. Obviously, a lot of growth characteristics on the previous rally. You could see how supply could come really quickly and just push everything down. And obviously, this is just into COVID low. And then we go into the consolidation and volatility diminishes. As volatility diminishes, we're thinking, okay, we're probably going to have a rally from here. So first position open, and from 17.5, we're going to about 27. So this seems to be like, okay, the beginning of a sign of strength or an upthrust type of rally. Fails back into the trading range. I think the more optimal exit was somewhere here, just to make it, slight profit, break even. So this is like a break-even trade. And you kind of realize right away that this was just an upthrust action in the potential phase B. So then when the price starts to consolidate in this area, you're thinking, okay, probably phase C. Another sign of strength, last point of support, and the position is reopened here after this reaction. So this was a really good reaction relative to this one right here, right? Because it stops much earlier. And that is suggestive that, demand is coming in and absorbing supply. Supply is diminishing. Here we had a slightly higher supply than in this area. So by this, we're making a judgment. I'm sorry, than this one right here, right? By this, we're making a judgment that most likely the rally that we're going to have is going to be much better. Not only we're going to overcome this high, we're probably going to overcome this high. Our expectation at this point is that this is going to be a major sign of strength over the all-time high. And we're probably going to consolidate here and then continue to the upside after the backing up action. That doesn't happen, right? So the mistake was made in this area, even though the exit was later on. And everything kind of collapses the same way how it collapsed here or how it collapsed here, just a variation of that. And at this point, we're thinking, okay, there should be some kind of rebound, and we should be most likely expecting a test, which comes next. And after the test, there is a hope that we're going to continue to the upside and resume the uptrend. This was a very long-term campaign type of the position. That was not a swing. So I think there is a kind of like an idea that if we're going to stay in this position, this weakness will materialize into some kind of strength at some point. And obviously it doesn't. So this becomes a break-even trade as well. I would say almost the same mistake, and that's why it's so ugly. So Franz, what are your initial thoughts on these two trades?
Hi, Roman. Well, I have actually two different thoughts about the two trades because I think they are very different. Even though, I think your analysis was great, but I think the first trade is kind of, it's a Romanism that we see a lot.
Yeah.
In identifying a bias that's bullish, and then just giving it the gas. I'm thinking going into the trade, I think your analysis, you've already hit the nail on the head. So your exit after your first trade if you were to draw a horizontal, and we at that point it would be difficult to see this upsloping trading range. So you're probably thinking more like a horizontal range. And if you look across that and you look at where your exit is, it's really not that. I mean, you want to see the failure back into the trading range, and there it is. And so the only thing I would say about that trade, that particular trade, is it was a phase B. You know, it was one of your tendencies, but I don't think the exit was bad, and I think the analysis was great.
Yeah, both exits are by the rules. I mean, you have to give up your position when it kind of hits your catastrophic stop loss, and this is where it was. I think the question here: could we have exited earlier? Right? Could we have exited maybe like on this bar, so slightly earlier, and then definitely somewhere here, like on this bar where the failure happens? So this would be a little bit better in terms of the execution. But
well, I think looking at your second trade, I think that is very much a potential phase C. I mean, we've now gone through this trading range for a year and at least a year, and there's plenty of cause there. And look at the lift off. I mean, look at the velocity, the aggressiveness of this move. It's a great get there. I think maybe, and this is something that you've been spending a lot of time on in WTC2, is using the significant bars and looking at the reactions and looking at what's happening with the significant bars. When you get this kind of an aggressive move, it almost screams, somewhat climactic to you. And looking at that, and then this is a daily time frame, maybe even as you suggest that we do in in climactic moves to drop back to a smaller time frame and see what's going on there, and because it really is a climactic kind of behavior, and and I can see where you're thinking backing up action, but that didn't materialize. So maybe incorporating the significant bars into this would have saved you a little bit of, but it would have caused you to change your from your initial intention was to go to a long-term campaign type trade, and you definitely have to change. You have to be pretty flexible in your thinking about that as well.
I would say you have to kind of develop an idea where, if you're a swing trader and you're looking for a swing trade, I mean, like, obviously you would be getting out like this. So your probably most optimal exit is going to be somewhere here or on the actual climactic action itself. And this would be your swing trade. And this would be a really good trade. You can leverage this. I mean, going from like 25 to about where the failure happens to 50. So that's times 2 in a month, 1 month. So this is a really good return.
Yep.
This is if you're a swing trader. If you're a long-term trader and your prospect here is the causality that was created throughout this whole area, then you're thinking that your long-term targets are way, way above. And with the long-term trading, you really have to develop some kind of sense of profit taking in the areas where you have overbought conditions. And I think that as a long-term investor in this particular trade, this was not done. So we're obviously in the overbought condition right here. We are overcoming the all-time high. We know that either the upthrust or the major sign of strength, and here is another kind of hesitation that I had at that time. Look at the extension above this point of the resistance. So this is, quite extended. The only problem here was obviously the actual breakout bar, which became a climactic bar, and so on and so forth. So I mean, like, we could nitpick this a little bit more. But once we do this, the major sign of strength will have some kind of high characteristics. So any type of failures here, you could trim it and then leave some. So then your trade profile is going to look like this. You're still going to have those, that second exit. You might actually give up it a little bit earlier after a failed sprint. But yeah, you could definitely improve the profile of the exit here. I think that's exactly what needed to be done. It is what it is in terms of what price does, but you definitely could adjust your behavior. Okay, well, with that, Franz, let's just go through our post-analysis. So, and I don't know even what to say about the bias, maybe like 50-50. Like, it goes up, but then it comes back. So I wouldn't say that the long-term bias is identified correctly, but the short-term bias is correct.
Mm-hmm.
So let's put 50-50, timing, yes, character.
Definitely, yes.
Okay, point of entry, yes,
Yeah.
stop loss. Was this stop loss, again, maybe 50-50? Just because if the stop loss would be used more with an understanding of like failure after this point, so maybe some of it will be out. Yeah, so 50-50, add-ons not applicable, and then the exit definitely a no. So we have 4 out of 7, so that's 57%. Okay, and I would say that so for the long-term trade, trimming position in overbought condition, that's number one. Then stop loss movement, better stop loss movement. What else, Franz? Obviously, better exit.
Yeah, I think that's pretty much it. I mean, I think the climactic overbought behavior should definitely be kind of a flashing red light that maybe trim, and that's, you've already identified that. So it's not like you want to get completely out of the position, but you're sorry, I've got a distraction in the background. That you're going to experience some kind of a reaction after a climactic move like that. So just be on the alert to it.
Mm-hmm. Okay. All right, guys. Well, that's it for this week. Kind of like a review of a couple of ugly trades. Hopefully, you're not going to make this type of the mistakes. But if you do, you have to go through your post analysis, identify those, think about those, and think about the adjustments that you need to make. Right. So, for instance, the adjustment for this trade would be to think about trimming the position in the overbought condition when the price extends really quickly from your point of the entry. And even if you think that the price is going to go higher, it is always great to take some profit, secure some profit, make the trade, move it to the break-even point, and then just to go from there. All right.
Yeah, something else, Roman, that kind of comes to mind, and that's the selection of this particular candidate. This is obviously the exploration of space commercially, potentially long term, has a huge, probably an unlimited market. But just thinking about it, where do we stand today? So with that, and it's still a pretty speculative situation. So, kind of factoring that into how it might act, because it's such a kind of a bet on the come kind of thing, that it might, just the nature of this particular asset itself might be subject to, these kinds of wide swings as participants try to, factor in, when is this actually gonna, when is this gonna start bearing fruit as a profit-making venture? So, I would think about that too. I didn't say that, but earlier, but I think that the whole selection, of something, a situation like this that's pretty speculative, needs to have that considered as how it might move as well.
Mhm. All right. Well, thank you so much, Franz, and thank you guys for watching this video. And as usual, we'll see you next week.
Thank you, Ramon.